China has set a new record by selling $53.3 billion of Treasury and U.S. agency bonds in the first quarter of this year. This action highlights China's strategy to diversify its financial portfolio away from American assets amidst ongoing trade tensions between the two nations. The Belgium's role in China's Treasury sales has been key in a related move. Belgium, often regarded as a custodian for China's holdings, has disposed of $22 billion of treasuries during the same period. This significant transaction forms part of the broader pattern of China reducing its exposure to U.S. financial instruments. The recent large-scale sell-offs by China have renewed global investor interest. This financial maneuver comes at a time when relations between the world's two largest economies might deteriorate further, influenced by the United States' latest policy adjustments under the current administration. Potential impacts of political changes in the U.S. Political developments in the U.S. also play a critical role. Former President Donald Trump has indicated potential aggressive fiscal policies towards China, stating he might impose a levy of more than 60% on Chinese goods if re-elected. This political stance could significantly influence China's future economic decisions. Stephen Chu, Chief Asia Foreign Exchange and Rates Strategist at Bloomberg Intelligence, noted, as China is selling both despite the fact that we are closer to a Fed rate cut cycle, there should be a clear intention of diversifying away from U.S. dollar holdings. He also suggested that China's selling of U.S. securities could speed up as U.S.-China trade war resumes, especially if Trump returns as president. Amidst selling dollar assets, China has increased its gold holdings, now accounting for 4.9% of the nation's official reserves as of April, marking the highest level since records began in 2015. This shift indicates a strategic adjustment in China's reserve management policies. The trend of increasing gold reserves is not limited to China. Geeta Gopinath, first Deputy Managing Director of the International Monetary Fund, pointed out in a recent speech that since 2015, countries closely aligned with China have boosted their gold reserves, while those in the U.S. bloc have maintained stable levels. She said, this suggests that gold purchases by some central banks may have been driven by concerns about sanctions risk. The consistent sell-off of U.S. securities by China indicates a deliberate strategy to lessen its reliance on the U.S. dollar. This financial strategy aligns with broader geopolitical shifts and ongoing uncertainties in global trade relations. China's financial strategy is complex and calculated, involving significant sales of U.S. debt and increased investment in gold. This diversification reflects its cautious approach towards maintaining economic stability amid fluctuating global dynamics. Tell me in the comment, do you think China's will succeed?